So I bought at $30 per share. Yeah. Went all the way down to $1.
Oh my god.
Alright, hi everyone, welcome to another fireside chat. My name is Adam, I have Rusmin with me.
Hello.
Victor's no longer in the office, just the two of us and the rest of our team. So we want to do this fireside chat where it's a bit more casual compared to our roundtables. And today's topic is about our biggest investing mistakes. Painful ones, but we lost a lot of money. And the reason why we want to share this with you is because we can learn a lot from mistakes, like how we thought that we were actually making the right decisions based on what we were thinking at that point in time, and then how it just didn't play out the way it did, and then what we did to get out of it, and what you can learn from that so that we can all become better investors. So I have one story to share, but why don't you share your story first?
Okay, so for my mistake, there are many. Okay, but let me share with you one that really hit me quite hard at the start when I invest in this shipping industry as a whole. That was like 15 years ago, right? Mm-hmm. So I was like trying to figure out which shipping companies at the time was quite distressed, right? Baltic Dry Index, which is the index that you measure the freight rate of a shipping industry, were down like 90% at one stage.
90% down.
Yeah. So how low can it go, right?
Yeah.
And that was the time where I rolled up my sleeve, right? Thinking that I'm the expert in this industry. I go in, I learn, I take months to study and siphon out good companies that will last through down cycle, right? So I spent months studying the industry, and I finally found two companies that I want to invest and ride for the upturn. Okay, so that was the time where I actually allocated quite sizable amount of money. At the time, I was just still starting up, so 5-figure sum is a big sum to me, right? So, and actually, it'll count about close to 20% of my portfolio, right? And I was so confident that the shipping sector will turn, okay? And then, fast forward 5 years later, as I look back, it was a silly move because I was trying to get into an industry where it's a commodity sector, right? And there's no differentiation. And the supply did start to improve, but then not only me, but a lot of fund managers will also saw the same opportunity, and they raise real money in the market, and they go and buy more ships, and that push up the supply even more.
so they depress prices.
Yeah, and the Baltic Dry Index actually crashed another 50%.
So 95% down.
Yeah. So that was my big lesson. And so the biggest takeaway for me at the time was that I should not be concentrating my money, and that was also the time where I realized that the biggest allocation that I can allocate in the stock or in the industry is actually not more than 10%. Okay, so that become my cap. All right, for any individual stock that I'm going to invest today, that remains my cap until today. Right, and of course the second mistake that I learned is the companies that are going to invest, right? So shipping industry has no moat. It's just pure commodities. Everybody compete based on price, supply and demand, and the price. Okay, so and then later on I started to realize that I should have invest into better companies, better high quality companies that have high recurring business, right? And these are what I call it as compounder, right? When you invest in them, even if you forget about them, they still compound over time. Yeah.
Okay. So two takeaways is that position sizing. You fell in love with the thesis
and overconfident as well.
And then you put in money. So I mean, one of the reasons why you were confident is that because you actually did your research on this.
Yes, I did.
Not like someone who's like, oh, hot tip, I buy this, and then they lost money, but they don't know what they're doing. In your case, you said you did months of research, and sometimes, was that worth the return on effort? I mean, obviously not, because you lost money.
Yeah.
But someone who's looking at this, should they pick investments do you need to do all this effort to learn something that's so far outside your, like Buffett says, your circle of competence? What do you think about that?
Yeah, I think you don't need to. Sometimes in investing, there are easy way to make money, there are harder way to make money. So by going into a commodity sector, even though you want to become an expert in the field, but that doesn't guarantee you making money, right? So you don't really have to spend time in the lousy industry, right? I'd rather you spend the time on studying companies that have great business model, right? Have a good competitive advantage, right? And they have still have a long runway to grow their business, right? Reach out to their customers, and by investing in this company, even if you pay for a fair valuation, not necessarily undervalued, you still turn out well over the long term. Right, so that investment strategy by finding high quality businesses, I think I learned that it suits my profile, right? And I like it that way, and I like my investment to work really hard for me without any of my attention.
Yeah, no, you don't need so much active monitoring.
Management.
I mean, you'd still follow up, but
yeah. On the other hand, for shipping, I still have to monitoring the dry bulk shipping index. Look at the supply, demand, and then it's all over, right? So sometimes the oil prices drop, and then all of a sudden the freight rate also drop because the operating cost now is lower. So everybody fight even more aggressively, and that's how the multi-dry index continue to drop.
So it sounds like a lot of work for not a lot of reward.
Yes.
When your time could have been spent in more, it's basically an opportunity cost.
Yeah. Or you could have I could have spent the time spending my time with my family, right?
Yeah.
Rather than
just lepak lah, right? Yep.
So how about you? What is your biggest mistake?
Yeah. Okay. So I've shared this story many times, and it's still thankfully my biggest mistake so far. I mean, like you said, there are other mistakes, but this is the biggest one, and this is when it's very early on in my investing journey as well. So it's good that you make your mistakes early so that you have less money to lose.
Yeah.
Right. So I'm grateful that I lost the money then. So it's basically in Citibank, right?
Yeah, bank.
So this was back in 2007, 2008, just before the financial crisis. Terrible time to invest. So at that time, I was just learning how to do value investing. So the idea was that you take a look at good companies. So not like your commodity businesses or anything like, but really good companies. Citibank is a global business. It's a big company, right? So you look at good companies, wait for them to be undervalued, go in, buy, and wait for it to basically go back to the mean, to normal. So that was the whole idea. I thought I understand that concept, really simple. And at that time, the financial crisis started to happen. So what happened was that at that point, Citigroup was trading at $60 per share, and you had all this, like, the financial system was collapsing. From $60 a share, went on the way down to $30 a share. So it's a 50% drop. So a 50% drop in almost any case is like
how low can it go,
it's a big thing, How low is it going to go? And this is a global business. It's not like some mom and pop shop that's going to close down.
Yeah.
Big company. I was a customer of Citibank. I was going to the bank once a month to cash in my checks. I was receiving some US checks at that point in time. And I was going to the bank. There was like everyone's employed. The branch is nice and new, smells good. It's not just in Singapore. I mean, there are branches everywhere. So it's like, in my mind, down 50%. Business seems as per usual. There's still people banking with Citibank, customers everywhere. They're going to survive this and then eventually go back to whatever price it was going to be. And I took this inspiration from Warren Buffett. He invested in American Express in the 60s. And the story was at that point, American Express, I think, crashed about 50% as well. But he realized that the core business of American Express was still intact. Everyone was still using American Express credit cards. Merchants were still accepting American Express credit cards. So even though the stock price crashed 50%, American Express was still okay. So I took that analogy. It's like same thing with Citibank. There's still like everyone's still banking with Citibank. Everyone's still everything. The lights are still up and running. So I bought at $30 per share. Yeah. Went all the way down to $1.
Oh my god. That's more than 90%.
All the way to $1. And it was like, what? Like, what the,
Yeah.
How the hell, but that was like the bottom or like the peak of the crisis. It was really, really bad. So at that point, I was like, wow,
this is a real crisis, man.
So basically it went down to $1. Yeah. Okay. I can't remember if I actually bought somewhere and averaged down. Maybe I did, I can't remember. Maybe I averaged down once. But I think, and then it went down to $1 and then it went up to $3. So, and then it stayed at $3 for like a long time. So my average price was way beyond that. I think it was like 15, 20 or something like that. And I was like, at that point, I didn't even want to look at my brokerage account.
Yeah.
I didn't want to look at it.
It's normal.
It's like, it just reminded me of my failure, right?
Yeah.
It's like, I don't look at it. So I just kept my position. I didn't want to look at it. It was like, it didn't happen. It didn't exist. It didn't happen. I didn't lose that money. I didn't want to have a look at it. And then one day, I don't know how many years after that, I woke up and it's like out of curiosity, I just wanted to have a look at the stock price of Citigroup. So I went to my phone, went to search for Citigroup, look at this, I went to Google. It's like, oh, $30 per share.
Oh, wow.
Maybe I made my money back or broke even. I was so excited. Then I went back to my brokerage account, I logged in, still the same red loss. And I realized it's because Citigroup did a reverse split of 10 to 1. So $3 combined 10 shares into one became $30.
Yeah.
Still the same. So I didn't make any money. I still lost money. It was like, okay, that's it. I'm not looking at that again. So I lost a 5-figure sum. It was very, very painful. And at a point, like you said, at that time, you fall in love with the stock. You believe in the story. And you put a lot of money in and you lose money. And look at Citigroup today. It's still around, right?
Yeah, it's still around.
Yeah, but the stock price never went back to the peak before the financial crisis. But it's painful, and this thankfully my biggest mistake so far. But it's like it goes to show you that sometimes you think you are doing the right thing because you did a lot of research for dry bulk. But it's not like we were just like throwing darts and hoping something would stick. But you can still make mistakes. Yeah. So my takeaway is that same thing. We don't fall in love with stock. I put a lot of my money in that one. I lost a 5-figure sum, and the other thing I took away is that when you're young, you can afford to make this kind of mistakes. And I wouldn't do it now or in my 50 or 60. And the other thing is because of active income is so important. That you also, outside investing, you have a very successful career, whatever it is. And if you lose like 30,000, 50,000, if you're making 10, 20,000 a month, you make it back very fast, and you can put some more in and grow your portfolio some more. So you can afford to make those kind of mistakes, but obviously you don't want to. But having active income is very, very important. So for me, it was like I fell in love with the stock. I thought I was doing value investing, but actually I didn't understand the business and the toxic assets that were on the balance sheet at Citigroup at that point in time. I thought I knew the business. I really didn't. And I put too much money in it and I lost money. So that was my mistake.
So the key lesson for me, I think, by hearing from you is that start early. Right. So even for me, for myself, when you make the mistake, the amount is not going to be as significant as compared to when you start at your 50s or 60s because the amount will have ballooned up. Okay, so when you start early, you still have room to make mistake, and of course, most importantly, you must learn how to find good quality business, right, with a good economic moat, right, and of course, you need to be able to find those businesses that have a high recurring business, right, that can continue to grow, right, and of course, we right now I think we are having a launch on Alpha Quadrant. It's a course that we comes out, right, we launch once a year, all right, and in this course, we will teach you how do you go about finding those high quality businesses that's going to continue to grow and compound over the next 5 years, 10 years, right? So usually these are the stocks that I like to buy and then keep it there. All right. By the time 5 years later, when I look back, already 3 times. Right. Nice. And then 10 years later, hopefully it becomes 10 times.
I think one of the crucial things about having a course like that, you can check out alphaquadrant.com. It's open until 31st May, once a year, is that you really get to learn a framework of really understanding what the business is about. I didn't understand what Citigroup was at that point in time. So I thought I knew something, but actually I didn't go through the whole process to really understand what was the business about, what was on the balance sheet. But in Alpha Quadrant, you actually go through the whole process. You basically get all your ducks in a row, make sure everything's okay, and then you make an investment that is prudent. You don't overbet.
So essentially, from how do you go about finding those ideas to how do you manage them in the portfolio from a portfolio level, where that's where you want to reduce the risk, because any stock that you invest, there are risks come with it, right? So you want to reduce that risk, and that's actually through portfolio management. And of course, most importantly, when to buy those good quality stock and when to buy. Okay, we cover all of this in the Alpha Quadrant.
When to buy, when to sell. And valuation is a key aspect of that. So we teach you how to do valuation in the course, how to plot the valuation chart, so you know when something is over and undervalued. That will really guide your decisions. I thought Citigroup was undervalued based on the price chart because you're down 50%, but actually it was actually worth less than that because I didn't actually know the valuation. I was just looking at prices, which is a totally different thing. So we teach you the difference between prices and valuation and how you can actually, calculate the valuation of the stocks that you're looking at. So that's really important. So do check out alphaquadrant.com. Open from now till 31st of May 2026. Open once a year. We do check it out. So, the thing about this is that we made mistakes. And the thing about a course like that is that we made our mistakes. So you don't have to. You can learn from us.
Because the real mistakes out there really cost
a lot more.
5-figure, right? Depending on how much you actually put in.
So we wanted to share that with you. So, I think this is what the fireside chat about is today. We just wanted to share our mistakes. We have more mistakes. Maybe we'll do a part 2, 3, 4, 5 to share more of our mistakes with you. But just want to do this one. This was my biggest one. And then through that you can learn like, hey, yeah, you know, I made a mistake. I lost the 5-figure sum. You don't have
You don't have to repeat.
because you basically you learn from us as well. So I hope you can take away some of it from this video as well. Anything else you want to add?
Yeah, no, hope to see you in the web class, right, which we're going to conduct over the weekends.
Yep.
And you get to see me and Victor, and of course Adam.
So if you can, share your investing mistakes as well. If you want to share them in the comment section, we can all learn from it. And then we read the comments. I think stories like that are really interesting.
Yeah.
I would love to hear about that. Hope you like listening to our stories as well. But we can all learn from our mistakes. And of course, do check out alphaquotient.com. All right, so with that, my name is Adam. Thanks for joining us at this fireside chat, and we'll see you for the next one.